A major event is going to shake the crypto world. It's called the halving, and it happens once roughly every 4 years.
The bull run has been a topic of interest in the world of cryptocurrency ever since the Bitcoin halving event in 2024, with many people speculating on how high cryptocurrency will rise this year or the next. Some predicting 100x, 1000x, or even 5000x return on their invested capital, making thousands of dollars, if not millions, just with $100. This is crazy, you know?
At what point did you sell?
Well, I maxed like a total maximum of like 60 million.
I put $200 into Shiba Inu almost a year ago, and it actually went to $40 million at its peak.
This one crazy trader who bet $8,000 on a brand new meme coin had become a billionaire.
Governments that were once against Bitcoin are now getting involved.
President Trump today signing the landmark Genius Act into law. It's the first major piece of crypto legislation in U.S. history.
And big financial institutions too, through the launch of Bitcoin ETFs.
Asset management giant BlackRock took the first steps yesterday to launch a spot Bitcoin ETF.
But some critics still see it as a worthless asset.
They will come to a bad ending. Now, when it happens or how or anything else, I don't know.
Bitcoin is worthless artificial gold.
Everything is pumping right now. Oh man, I'm gonna be missing out.
People are scared. They're panic selling Bitcoin.
Just buy and hold.
The bull run, also called the bull market, is a period where the prices of cryptocurrencies go up, just like in other financial markets such as stocks, bonds, and commodities.
Bitcoin this morning hitting a new high above $123,000.
The bear market is the opposite of the bull run, or bull market, where the prices of cryptocurrencies go down.
Bitcoin was down more than 1.5% to under $111,000. Ether was down 2% to $4,284.
In a bull market, people often get greedy and buy more and more cryptocurrencies, which pushes the prices even higher. But in a bear market, people become afraid and then they sell, which eventually pushes the price down. So as you can see, people react differently to a bull market and a bear market. Bitcoin halving is the first signal of every bull run. During this event, the reward for Bitcoin miners is reduced by 50%. Bitcoin mining basically means producing Bitcoin using computers. When the reward is reduced by 50%, it impacts the supply of Bitcoin because miners now receive fewer rewards for every Bitcoin they mine. This means that the Bitcoin mining business becomes less profitable. This halving event has occurred every 4 years since the creation of Bitcoin in 2009. So with less Bitcoin entry circulation, it leads to what is known as scarcity, a limited supply of resources, but in this case, it is the supply of Bitcoin. With scarcity in place, the price of existing Bitcoin in circulation is pushed higher. This means that over time, the price of Bitcoin tends to rise, even though it sometimes falls. As of this recording, we have experienced 4 Bitcoin halving events in 2013, in 2017, in 2021, and the most recent one in 2024.
There is the equivalent of 9,000 to 10,000 Bitcoin per day in demand. So already we're at 10x more demand than supply. That's this huge price increase that we've seen.
Having talked about Bitcoin halving, there are other factors that may signal a bull run. One of these is the creation of Bitcoin spot ETFs. Bitcoin spot ETFs are simply a way for investors to profit from the price of Bitcoin without actually buying Bitcoin itself.
The Bitcoin ETF launch was one of the most successful product launches in financial history. No exaggeration. There is now roughly $113 billion in Bitcoin ETFs.
BlackRock is wading into the battle to launch a spot Bitcoin ETF. The asset management giant filed a proposal with the SEC to launch the iShares Bitcoin Trust.
The D.C. Court of Appeals just sided with Grayscale, which sued the regulator over its denial of a plan to convert the Grayscale Bitcoin Trust into an ETF.
Big investment companies like BlackRock, Grayscale, and Fidelity have launched their own Bitcoin spot ETFs for their investors. And we all know that these investors are wealthy people, which means more money will flow into Bitcoin, pushing its price up. But that's not all at all. Some governments around the world have become more crypto-friendly than before.
It's been 7 months since the president of El Salvador, Nayib Bukele, declared Bitcoin as legal tender.
It's the evolution of humankind. So we're going there.
The US has even established a strategic Bitcoin reserve in a quest to become the crypto capital of the world.
This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world.
A strategic Bitcoin reserve is simply a long-term accumulation of Bitcoin by an institution such as a government. El Salvador, a country in Central America, has also been accumulating Bitcoin for a long time. The US Federal Reserve can also influence a bull run by lowering interest rates. This encourages capital inflow into cryptocurrencies. When interest rates are low, it becomes easier to borrow loans from banks and repay them with a little interest added. Now, the mainstream media and social media can also signal a bull run, especially when cryptocurrencies start reaching new all-time highs.
Bitcoin climbed to just under $114,000, Ether rose 2.8% to $4,400, and Solana Sol token increased by nearly 5%.
An all-time high is the highest price an asset such as Bitcoin have ever reached since its introduction to the market. For now, the all-time high for Bitcoin is over $100,000. But even at that, the bull run hasn't fully occurred yet. Some say it already happened in 2024. But who knows? Since the cryptocurrency market is full of speculation, some believe that if the US Federal Reserve cuts interest rates, the bull run will begin, while others don't believe that. Greed and fear are the two primary emotions people experience in the cryptocurrency market. Just like in any other financial market, both of them can lead to bad decisions. Greed, when you go all in, meaning investing more than you can afford to lose. Fear, when you sell all your cryptocurrency because you are afraid that the price will go down. But greed and fear are not entirely bad. There's also a good side of them, because greed motivates you to take advantage of opportunities in the market, while fear protects you from taking unnecessary risks. But over-relying on either one will cost you a lot in the market. FOMO, fear of missing out. It's a very popular slang term in the world of cryptocurrency. It happens when you buy cryptocurrencies out of fear of missing potential profits. This can lead to huge losses because FOMO usually happens when the prices are already near their peak. Now, this can happen to anyone, no matter how intelligent you are, because we are all emotional beings. But FOMO has other consequences apart from losing money. It can lead to depression, anxiety, and disconnection from family. And it's also very addictive. So if you see anyone addicted to it, help them by contacting a healthcare provider. Apart from missing potential profits, FOMO can also occur in other scenarios like trying to avoid big losses, being overwhelmed with too much information, or having an early entrant mentality. Now, early entrant mentality simply means the belief that if you buy a coin when it is new in the market, you always profit from it. Just like those who bought Bitcoin when it was just below $10. Other emotions common in the cryptocurrency markets are overconfidence and revenge trading. Overconfidence is when you overestimate your ability because of past wins, while revenge trading is when you trade in order to recover money you have lost. So emotions are not something you can completely get rid of, because they are part of us as human beings. As you participate in the upcoming bull run, always keep in mind that emotions can make you lose your money.
The harsh truth is crypto is a PvP game, zero sum. If someone makes money, someone loses money. So if someone makes $100, someone else has to lose $100.
Thomas Crowell is making money, a lot of other traders are making money, and then the most traders out there are actually losing money like crazy.
I am sure you have heard that before, especially in the cryptocurrency market. This means most people will not make money in this market. Only a few actually do. So it's basically about finding someone willing to pay more than you did. This is why some people call it a scam, because it is based on the greater fool theory, which is buying an overvalued coin because you believe you can sell it to someone else, a greater fool, at a higher price, even if the coin itself has no real value.
It's kind of a pure greater fool theory type investment.
This is very common with meme coins, especially new ones, because many of them have no real use case, meaning they hold no intrinsic value. Unlike Bitcoin, which some people accept as a medium of exchange, just like money. In previous bull runs, we have seen plenty of scams like fake ICOs and rug pulls. ICO, initial coin offering, is when developers sell new coins that haven't officially launched yet, so that when they do launch, you can profit if the price rises. But this doesn't always work out. Sometimes the coin's price drops after launch, and some ICOs are outright fake, meaning that they will never launch at all. Rug pulls are even worse. That's when developers lure investors into buying coins with promises of high returns, then sell off their own holdings and disappear with the money. This causes the coin's price to crash, leaving you with nothing. These scams can happen anytime in the cryptocurrency market, but they are more common during the bull runs. Towards the end of a bull run, at the peak, new investors usually FOMO in. They see coins hitting new all-time highs and don't want to miss out. But this is often where big investors take profits, causing prices to drop and leaving new investors with heavy losses. HODL. If you've been in crypto for a while, you've heard this term. It stands for hold on for dear life. It means holding your coins long term, regardless of whether the market is going up or down. This can be risky in the short run, especially during a bull market. Most people who join a bull run are looking to make quick money, and HODLing takes patience, sometimes years. In fact, it's not a good idea to HODL all the way through a bull run without taking profits, because you could lose most of your gains when the market reverses. Instead, you could HODL during the bear market and then sell gradually during the bull run, or you could HODL for years and sell later when you've reached your target. Because if you compare Bitcoin's price in 2010 to its price today, you will see there is a massive difference. Some investors got into previous bull run very early, during the bear market when no one else was buying, just like Warren Buffett once said.
If you have a temperament that when others are fearful, you're going to get scared yourself. You know, you are not going to make a lot of money in securities over time.
But their mistake was never taking profits. Greed convinced them that a bull run would last forever. That is why in crypto, you need to know when to buy, but even more importantly, you need to know when to sell. Those who HODLed without taking profits and those who FOMO'd in at the end of past bull runs became what you call exit liquidity. Some people even claim that during bull runs, only insiders and a few lucky investors actually make money, while majority lose.
95% of retail traders lose money.
Losing money can be disastrous depending on who you are, but to limit your losses, you have to do the right things. First of all, you should know how to do your own research before participating in the bull run or in the cryptocurrency market in general. Doing your own research means understanding the fundamentals of the coin you want to buy, so you can know whether it's worth investing in. And it doesn't stop after you have bought the coin. You also have to stay updated with the latest market news, so you will know when to sell part of your holdings or exit completely. Many believe that buying multiple coins help reduce your risk. This is called diversification. It's just common sense. Take this for example. If you go all in on a single coin and it crashes, you are left with nothing. But if you spread your money across several coins, at least one or two might perform well, even if others don't. Diversification can also help with your emotions, because even if only one of your coin is performing well, it keeps you hopeful and calm. Having a good plan and sticking to it has helped many people succeed in this market. But here's the problem. Creating a plan is the easy part. Sticking to it is much harder. To win in this market, you need to develop the discipline required to stick to your plan. Now, you might ask, what kind of plan should I create? Or what should my plan be based on? Well, one of the most proven strategy is DCA, dollar cost averaging. This means buying a fixed amount of a coin on a regular schedule, regardless of its price. You can do this weekly, monthly, or whatever works for you. And you can even use DCA when selling too, by selling a fixed amount at regular intervals. This strategy can reduce your risk because nobody knows what exactly will happen next in the market. You can only predict. If you're right, you get rewarded. If you're wrong, you take the loss. There are a few other things to always keep in mind. Never invest more than you can afford to lose. Be patient and give your coin time to grow in value. And remember, selling when you are greedy is harder than buying when you are fearful. So before joining any future bull run, make sure you are fully prepared, because winning in this market isn't easy. Thanks for watching. If you have learned something new today, hit the like button and subscribe for more. And let me know in the comments, do you think the next bull run will be bigger than 2021? Thank you once again, and